Okay, so now what if the market moves in your favor, right? Where do you take profit? So when it comes to exiting your winning trades, you have two options. Number one, you can adopt a swing trading approach or a trend following approach. Let me explain these two methods, right, to you, and you can later on kind of decide which of these two approaches suit you best. There's no right or wrong here. There's no, swing trading is better than trend following or stuff like that. There isn't, right? It really depends on you, the trader. So first, let's talk about swing trading. What exactly is swing trading? So as a swing trader, what you're trying to do is to capture just one move in the market, just that one swing, zoom, that's it. So to illustrate, what is a swing in the market? Let's say market is in a range between these highs and these lows. Market goes up, that's one swing. Comes down, that's another swing. Goes up, that's one swing. Come down, that's another swing. So basically from here to here, this is one swing. Here to here, this portion here is another swing. Here is another swing, and this is another swing. Make sense? I know this looks like a mess, but in other words, right, swing trading refers to capturing one move in the markets. So now the question is, how do you capture one swing? So to do it, right, you want to exit your trade before opposing pressure steps in. So let's say if you're a buyer, then opposing pressure is seller. If you are a seller, then opposing pressure to you is the buyer. Right, let me just explain, right, since some of you might be confused. So let's say again, market is in a range and you bought near the lows of support. Let's say you bought over here. Okay. Now let me ask you, if the market moves in your favor, where do you think sellers might come in, right, to push the price down lower? Well, if you know that this is a range and if you know that this is an area of resistance, you will conclude that, Rayner, I think, sellers might be at resistance, right, trying to short the market at this area. And if you think along those lines, you're not wrong. So this is what I mean by, exit before opposing pressure steps in. If you know that this is an area of resistance, you want to take profit before resistance. The keyword here is before resistance. Okay, you don't want to set your take profit level here above resistance or here. Why is that? Very simple. Because if you were to set your take profit level here above resistance, what it means is that you will only exit with a profit if the market breaks above resistance. If it doesn't, right, you will watch your trade reverse 180 degree against you and hit your stop loss. Do you want that? Of course not. So this is why you want to be smart about this, right? Don't set your target above resistance because you're making the market difficult, right, to reward you. Instead, set it before resistance, before opposing pressure steps in, because this is where you have a higher likelihood, right, of exiting your swing trade with a profit. Okay, so let me share with you a few charting examples so you know what I mean. So if you look at this chart over here, let's say for whatever reason, right, you went long you saw this bullish candle and you went long on the next candle open. Okay, and you're trying to just capture one swing in this market. This is the oil market. This is the daily time frame. Now let me ask you, where should you exit this particular swing trade? Where should you set your target? I'll give you three options. Okay, option one is here, A, B, or C. All right, let's call this A, B, or C. Think about this, right? Where do you want to exit this trade to capture one swing? A, B, or C? And the answer is C. Why is that? Remember, we want to exit our swing trade before opposing pressure steps in. If you set it at A, you are making the market, difficult to reward you because the price has to break above this swing high over here before it can reach your target, making things difficult. If you set it at B, it's not as bad as A, right? But remember, this is a swing high. This is a potential area where selling pressure could step in. There's no guarantee the price will retest this swing high before it reverses down lower. Okay, because the price could come up higher, just approaching the swing high, and then start to reverse down lower, meaning the opposing pressure, or rather the sellers, step in earlier, right, to push the price down lower. So if you want to be conservative, if you want to be smart about this, and if you want to capture just one swing in this market, C, right, would be a better option because this is where opposing pressure, or rather this is the level, right, before opposing pressure will step in, right, to push the price down lower. Okay, so to me, C, right, is a much better level, right, to exit your swing trade. This is where you're kind of like earlier a little bit, right, and exiting your trade before opposing pressure at the swing high steps in to push the price down lower. So if you're exiting your trade somewhere here, right, you're kind of, putting yourself in good shoes because this is the swing high, this is the area of resistance, and this level is before the opposing pressure at this swing high here. Another example, this is the chart of gold. Okay, so let's say for example, this time around, market here had a rebound. Okay, so let's say at this low, it rebound closes green. Let's say you enter on the next candle open again. At what point, right, do you want to exit your trade to capture just one swing? If you ask me, it will be somewhere about this level here. Because first, let's first identify where is the swing high and low in this chart. So the swing high is at this price point. And the key thing here is to exit your trade before the swing high, before opposing pressure steps in. So this is ideally, right, probably somewhere about here is where you want to exit your swing trade. So if the market you enter over here, this over here is where you are likely to exit this particular swing trade. This over here is before this swing high here. Make sense?